Euro dollar. So the euro has seen some sharp setbacks over the past several sessions, with the market once again stalling out ahead of 115 and now breaking down through critical support at 110.87. The break and close below 110.87 on Friday sets the stage for the next major downside extension and bearish continuation back towards the July low at 108.09. At this point, look for any rallies to be very well capped into the 113 area. Sterling dollar. So cable rallies have been very well capped ahead of 155 or just above 155, with the market now rolling over and looking to put in a lower top ahead of the next downside extension back towards and eventually below recent lows at 151.07. At this point, only back above 156.59 would compromise the bearish outlook. Dollar yen. So although we've seen some impressive gains in dollar yen over the past several sessions back above key resistance in the 121 area, while the market holds below 121.74 on a daily close basis, the overall structure continues to favor the downside, with a lower top sought out at 121.74 following those sharp setbacks that we saw back in August. At this point, look for the market to see some renewed downside back towards and eventually below recent lows in the 118 area and towards that August base at 116.12. Again, only a close back above 121.74 would compromise the newly adopted bearish outlook for dollar yen. Euro Swiss. So Euro Swiss remains highly constructive, with the market overall consolidating over the past several months, but locked within a more constructive recovery outlook since basing out earlier this year. At this point, look for any setbacks to be very well supported above 107.14 on a daily close basis, with only a break back below to compromise this recovery outlook. Eventually, we should see a push back above the recent highs at 110.50 and towards 112 further up. Aussie dollar. So Aussie remains locked within a well-defined downtrend, though the market has been supported off recent multi-year lows. At this point, though, any rally should be very well capped ahead of 74, with only a close back above 74.40 to compromise the bearish outlook. Dollar CAD. So dollar CAD has seen some very impressive setbacks off 11-year highs, with the market trading from 134.57 all the way down into the 128 area. But with the 128 area representing some solid previous resistance now turned support, the market has found what looks to be a higher low at anticipation or ahead of the next major upside extension back above 134.57 into fresh multi-year highs. Kiwi dollar. So Kiwi has been bid up in recent trade after stalling out by fresh multi-year lows, though the market is expected to put in a lower top ahead of a bearish resumption back down towards those multi-year lows. Ultimately, any rally should be very well capped into the 70 area. SPX 500. So the S&P 500 has seen some impressive gains over the past several weeks, with the market recovering out from those 1833 area August lows to trade all the way up towards the 78.6 fib retracements off of that major record high move down to the August low move. At this point, a close above 2072, that 78.6 fib retracement would open the door for a full retracement back towards the record high from May. However, inability to close above 2072 will keep the pressure on the downside, with the market looking to put in a lower top ahead of a bearish resumption. Gold. So gold continues to show a recovery outlook over the past several weeks, with the market potentially putting in a fresh higher low at 1100 confirmed on a break back above 1170, which should open the door for fresh upside towards the 1233 area over the coming days. At this point, any setbacks should be very well supported into the 1135 area, while ultimately only back below 1135 would compromise the recovery outlook for gold.